Good morning, everybody, and welcome to the European crossover webinar. Sorry, I didn't even realize we hit the top of the hour. I was just looking at a crude oil chart and trying to do some updates on that. Um, but welcome to FOMC Day. We've actually seen the euro going to move up, and we actually moved into a little area right here at 1123. And let me go and put this on the 2-hour chart. Yeah, there we go. You can see that 1123 coming into play right there. But we have seen this market going and step up a little bit higher. Dollar CAD came into our secondary resistance here. No, I thought we made it all the way to 3108. No, we went to 31 and paired back. Cable still on the push here. And cash dollar index just a bit weaker, coincided with the same way the euro tagged that bias resistance line, the same here. That's an older bias resistance line, but nonetheless. And a little bit of strength coming in here with Aussie. Dollar yen just, what's the right word? What do you call it? Consolidating. The move, it's actually pulled back a bit, but kind of consolidating this overall move here, which is kind of marking time ahead of Bank of Japan. But we'll see how much we do move. We did see a pretty good movement here in the crude oil yesterday. And bear with me. There we go. So let's go on in. What we'll do is we'll just go and take a look at the news. We'll go and actually touch. Let's go and move into the. Did some chart rearranging on my screen, so things look a little bit different. But hopefully, this is thing for improvement. So here we are today. We did have a Spanish flash came out at the top of the hour, which we were in, and German unemployment changed, but that's not going to be till almost at the top of this next hour. Obviously, a little bit of a difference here with the daylight savings time. Do have manufacturing business confidence out of Italy, as well as Eurozone business climate and economic sentiment. That'll be at 6 a.m. Eastern. And today we do get ADP report as well as advanced GDP. And German CPI is going to be at 9 a.m. Eastern. Generally, that comes in an hour earlier, but as I mentioned, with the daylight savings time, things have changed around. And of course, we do have FOMC day today. Then later, as we roll into the for Asian session, we do get Bank of Japan. Don't see it here. I don't think it's the next day. Hold on. It should be that. We'll see. But that should be Bank of Japan. Okay. Let's go and move into the news. Dollar treads water before the Fed and sterling steadies on looming elections. The dollar traded narrowly as markets braced for a rate cut by the Federal Reserve later on Wednesday, while sterling steadied after Britain's lower house of parliament approved calling an early election in December that might break the Brexit deadlock. The dollar was steady against the euro at 110 and flat versus a basket of six major currencies. Well, we do know that the euro did make that run period at 11.23. Against the yen, the green pack was a little moved at 108.84. The U.S. Central Bank expected to cut its policy rate for a third time in a row when it concludes its two-day meeting on Wednesday. After lowering interest rates in July and September, the central bank was expected to cut again by 25 basis points, taking the Fed funds rate to 1.5 to 1.75. With a cut today completely priced in, markets are looking for the Fed's stance on its policy outlook, said Masachiro Ichikawa. Investors are awaiting any indication that further cuts are likely, with futures prices suggesting more easing expected in 2020. If that is foreshadowed, traders expect the dollar to rise. If the market is going to be priced in the end of the current rate cycle, the dollar yen could climb above 110 yen, said Tohiro Sasaki. On the other hand, if the market is going to price in one or two more cuts after this month's expected to cut, the pair could fall to a mid 107 level. Optimism that Washington and Beijing could finalize the first stage of a trade deal next month had boosted risk assets. A U.S. administration official said on Tuesday an interim trade agreement between the U.S. and China might not be complete in June for signing on the sidelines as an Asian-Pac summit in Chile next month. Meanwhile, hopes that a disorderly Brexit can still be avoided supported the pound. Britain will hold its first December election in almost a century. After Prime Minister, well, that's pretty amazing. On first December election, almost a century. After Prime Minister Boris Johnson won approval from the lower house of Parliament on Tuesday for an early ballot aimed at breaking the deadlock of the UK leaving the European Union. The bill, calling for a December 12th election, now goes to the House of Lords for approval. On Monday, the EU agreed to a 3-month flexible delay to Britain's departure. Before settling back, the pound climbed as high as 29.03. We know our bias chart resistance has been 29.13. Sterling has struggled to hold on to its modest knee-jerk gains because of the outcome of the election is highly uncertain. While Johnson seeks to gain a parliamentary majority to ratify his Brexit deal, the outcome of the election remains unpredictable, with large numbers of voters fatigued and enraged by the Brexit process over the past 3 years. Both major parties, the ruling Conservatives and opposition Labour, have suffered an erosion of support among their traditional vote banks. Let's go on and move on. And sterling holds the line as FX markets try to price the UK election. The British pound wobbled briefly on Tuesday as Britain looked set for a snap December election, but its recent surge on hopes of a smooth Brexit looked maybe capped by outside risks that the various elections outcomes could bring. Sterling has gained more than 5% over the last 3 weeks against the US dollar, and stocks rallied. But the growing optimism has been punctured this week as market watchers worried that some of those concerns have dodged investor sentiment for most this year may return to haunt the pound if the election result is not a clear one. While pollsters and financial markets expect the ruling Conservative Party to win the December vote, the market watcher says these probabilities can shift rapidly as the election date approaches, as shown in the 2017 general election when the opposition Labour Party nearly doubled in support. I'm short the pound for now. It's going to be all about poll tracking and hedging for downside risks, said Jordan Rochester, currency strategist at Nomura, based in London, who has purchased a 7-week put option on the pound and has gone long on the euro sterling. A 7-week option overlaps a possible election date and around December 11th and gives the buyer of the option the right to profit from any potential drop in the value of the currency after the vote. Prediction site Belfair puts the probability of Conservative Victory Party at more than 80% and the possibility for Labour Party victory at around 10%. They were both neck and neck as recently as June. British lawmakers approved on Tuesday the government's timetable for passing a law which calls for the election on December the 12th. The election has also taken some steam out of the pound's rally as investors brace for a multitude of scenarios. On Tuesday, the pound was trading around 28.86 before 1%, about 1% below a 5-month high of 130. I don't see immediately that the risk-reward ratio has shifted in favor of the pound, and most of the long-term players have also adopted a similar wait-and-see approach, said Ugo Laccioni, head of global currency. Below the relative calm of the cash markets, traders are bracing for more volatility around the election results in the month-end volatility gauges. Spreads between the 2-month and 1-month implied volatility gauges for the pound, indicator of the perceived swings in the British currency, have widened to their highest levels in 6 weeks. An election also potentially throws a no-deal Brexit scenario, a risk which is now almost priced out of the market. And its late updated forecast, Morgan Stanley, Goldman Sachs put the risk of a no-deal Brexit at as low as 5% and assign a 75% probability of a deal, followed by the likelihood of a 20% for Britain opting to stay with the European Union. However, Ross Hutchinson, a rates fund manager at Aberdeen Standard Investments, said the two potential scenarios where a no-deal Brexit can be back on the table if a Conservative Party victory emboldens some of the hardline factions in the party to withdraw support for the current withdrawal bill before the next extension deadline at the end of 2020 of January. A second scenario would be possible if a victory for the opposition party includes the Labour and the Liberal Democratic parties encourage them to hold a second EU membership referendum in which a majority again vote to leave the bloc. Neither of these cases are a base case, but no deal cannot be totally ruled out, he said. Oh my goodness, more Brexit. With that, we're going to move into the main screen and move on to analysis. Should be a relatively quiet session until we get to FOMC, I would think, but we shall see. And let me just get a quick drink of water. So moving on with the euro has managed the close above 111, and we're referring to this yesterday's session. Resistance on FOMC day is 1160, with 1130 key for the bulls to overcome on a daily close. Support is 1065. So there we go. So as I mentioned, resistance is going to be 1160 with 1130 key for the bulls to overcome on a daily close, and support is 1065. Now, we always put the asterisk when it's a daily level. So it's going to be key for them to get above 1130 on a daily close, but the resistance will be 1160. We can probably push above 1160 depending on FOMC comes, but I mean, that's been pretty much a stalwart level. Let's go move into cable. Cable finished Tuesday with a doji. The bull bear fight takes place at 29.13. Support widens to 27.43 for FOMC day. So we're taking into consideration for this slide. I'm not so sure that we'll see that because the way starting is continuing to really make a place and try to hold. We haven't quite made it yet. You can see the 29.13. If we take a look here, the day's high so far has been 29.05, and 29.13 remains the bias chart resistance. See right there. The only difference is we're going to widen it a little bit lower to 27.43. With that, we'll move into the Aussie dollar. The Aussie is perking up a bit. Resistance of 68.80 followed by 69.76 on FOMC day. Support is 67.76. So, and I meant to say support is 67.72. So, because we're widening it a little bit down here in case we, we've perked up a little bit in case we slip back. It's going to be, if we saw kind of a worst case scenario, it's going to be 67.72 on the downside. Once again, we've widened these out to allow for the potential volatility on FOMC day. It's going to be 68.80. Well, we're just about there right now. You can see that. So given it the stretch, we'll go with 69.76. That seems like an awful pretty good little stretch here. That's way too high. But that 69.76, you can see where I'm coming up with that here. It's just, you'd have to really see this thing explode in order to get to that. So I think, could it eventually get there? Yes. Could it potentially get there if things really, everything clicked or something? But considering the range we've been in, that would really be quite the stretch. So, and we're almost knocking at the door here. I'm just going to move this just a bit higher here. I'll show you where. Right there. Let's call it 69.28. Because we've been trading so tight, I mean, technically we look at 69.44, but the way this market is traded in such tight ranges, that would be a bit of a stretch. Not that we couldn't, but I think you'll see people step in, maybe take a little bit here. Let's go move into the Kiwi. The Kiwi remains weak. It's pretty clear to see. FOMC day resistance is 64.36 with support of 63 even. Let's go into the dollar CAD. The dollar CAD is doing its best to hold the fort down above 30.43. Initial resistance that we already had that from yesterday. So we did not go and put the update here. But for today, it's going to be our secondary resistance. We'll go back to our secondary resistance, which is going to be 31.08. And we're going to keep this 30.43. because if we do slide back down, once again, that's going to be holding there. We're still trading fairly tight. Remember, our initial resistance just yesterday was 30.83. Well, we're giving it the benefit of the doubt for 31.08 on the which was the secondary, but we're going to hold here at this 30.43. I mean, as far as listing it as our bias chart support. Let's go into the dollar peso. The dollar peso remains mired below 1920 with support coming in at 1902. For FOMC day, resistance is going to be the former breakout level of 1923.6 with support at 1892. So we're stretching because of the FOMC day, we're stretching out the ranges or the levels for the potential volatility. So a moment. That's a decent little gap. I'm going to put it like this because the 1892 is still there. It's supposed to be like that. And on the upside, there you go. The dollar yen remains on the bid ahead of the FOMC and BOJ. Key resistance will be the major pivot of 927. You can see that there. A daily close above will open the challenge to 1050. We've talked about that in the last couple of days. You can see that. You can see the significance of this pivot. And I said it will be 1050. And that's for starters. Support will be 812. So $9.27 and $8.12. Once again, encompassing that volatility or potential volatility that we can see today on FOMC announcement. Let's go move into the cash dollar index. The dollar index remains under pressure. Resistance on FOMC day will be 98.34. We actually paired back, so this may be a stretch here. With further resistance at 98.65. Support is 97.46 followed by 97.20. So once again, we're opening up the ranges. So if we get a surprise, it's not just one level. You have to factor in case, and the reason I'm saying not that y'all don't know, I'm just saying, thinking, looking here, well, that's a bit odd. We have these extra price levels in there. Once again, encompassing potential volatility. So yeah, we could set up at 46, but once you get there, like, oh, okay, so what happens now? So once again, we're going to allow for 20. Not that we couldn't get past 20, you can see that, but that'll be on the short run. And here, I'm going to go with this 98.11/34. Let's not go too overboard like that. There we go. With that, let's move into the cross rates. Hmm. Okay, looking at this Kiwi yen, basically stuck in the mud, and there's been no changes here. We're waiting BOJ, which that could really get things cranking. Yeah, right there, 69.78. No changes there. And on the downside we have to give a little bit more room, and the downside is going to be 68.23. Once again, we've widened the ranges for FOMC day, so I don't want to sound like a broken record, but well, if it's so quiet, why are you widening the ranges? Well, that's the reason why. Let's go on and move into the euro yen. Okay, it's going to be 21.72, the 50%, and only because of the Bank of Japan, I do want to give it this extra stretch, which is 22.10. It's actually 22.11. So there we go. And once again, now widened over here due to the Bank of Japan. On the downside, though, we'll just allow for a little overshoot there, which would be 2025. I mean, we may be tightening everything up by tomorrow. Let's move into Euro odd. Support is going to come in 61.20. Upside B right there, 62.50. Let's move on to the Euro Kiwi. It's going to be right there, 75.29. Support right there. Actually comes in right there. 73.92. Looking at the guppy, well, we've been challenging this level, but we haven't been able to get above it. Things may change with BOJ. So resistance, this is still a good resistance level, but we're just gonna, so we want to leave that there. But on the stretch, we're looking right there at 4106. Downside, right there, 3887. It's just a little bit of an overshoot at 3870. And lastly, with sterling odd. Just a bit of a break. 8654. On the upside, right there, 8864 for right now. And there's a bias chart. As I said, I think it's going to be quiet until FOMC day. We'll go and take a look at some of the other markets. And you can see here, we have lifted a little bit here on the bun. Gold, we've seen still continued moves yesterday. Wow, look at this. On the 2-hour chart. And crude oil, we saw the rebound, but then we came back in and slid back here. This was actually a key level. This market, we go into the 30-minute. I'll look into a different area here. I'm using some other charts to look at some volume or expand a little bit more on volume. And so you see extra charts here, but bear with me. I'm only mentioning those to some of the folks that that trade crude in the room. Obviously, one of them is DK, and Jane also does too. But taking a look here with the crude, we do see this market run out of gas, and I was looking for an upper high here at 55.92. I think 92 or 94. There's 94, and we ran out of gas at 92, and that was key there. And we saw some pretty good volume come in at that point, which suggested that we'd probably knocked a few people out of the box. And then from there, you can see the market really slid back. And I was looking for, I discussed in the room, for those of you not with ForexAnalytix. So I was looking for the market to, I got short above 50, but I was looking for the market to pair back to around 36, make another rally back, and eventually make it down to 55.20. The market really took off. I was able to actually get out of that with minor gains. And I'm glad I did, because then what happened was, and I was telling the folks in the room, I saw support then at that point at 55.47, and actually the market bottomed out at 45, rallied, made a new high on the move right there, and then we ran out of gas. but the high on the move came up short of, and we're not looking on the futures. You can see the move rallied up to as high as 91 here. You see that? And my resistance was 94. And then from there, we saw this move come down. Now my expected move down to 55.20 did come to fruition here in early European trading. So we'll see what happens. But obviously, like I said, the trade I do in the crude oil is very short term. I'm mean, primarily just use a 5-minute chart along with a 30-minute, and I'll look at a 2-hour. Same thing here with the gold, but I haven't done too much with gold lately. It's been so slippery, and my focus has really been on crude. Although, as I've mentioned, I do keep track of the euro and the other FX pairs. It's just that, as I mentioned, euro's been kind of tough to trade, but I thought because it's been trading such slight ranges, I was actually going to come in and trade that with size. But I've been looking at different things that have expanded what I've been doing here with crude oil and the use of volume. And also we'll start to incorporate, which I've used before, is the market profile, which I haven't used in quite a bit, but I was using some time back. So this is a okay with what they've got, but not. I'll be looking for different options at this point because of that. Like I said, so although I do like using these, sometimes these will be off by a few cents. So really need to have my futures available to me right now. The futures, these futures are trading at 55.35. It's not off by much. It says 55.32, but like I said, sometimes we're at a turning point. It does make a bit of a difference. But we'll see. I mean, I said yesterday in the chat room, I thought that I couldn't see gold making another run down here after, ahead of FOMC. This ended up holding, but when I said that, it didn't do anything. I mean, we had a little hammer and we just sat there. And then also we took off. We ripped up a little bit here to the tune of about $5. And then we kind of quieted down. But I would think that we'd see some kind of semblance of a rebound here. The key thing is going to be what the Fed's focus will be looking out. You can see here we ran out of gas at 23. And here's what we're talking about. See here on the 5-minute? Look at this. A nice gravestone doji here. So you can really, like I said, maybe the days are starting to come back with the euro where these ultra scalp trades are really looking to be beneficial. Yesterday we had a nice scalp. Doesn't sound like much, but I think we ran out of gas at 11.13, and then we came down to 10.97. That doesn't sound like much, but it's been so predictable on some of these moves that you can trade with some pretty decent size. So, but my focus has been primarily with the crude and to a lesser extent gold. But that's all we have for today. Good luck trading, and we'll see you on the daily roundup.